don't say that Peter Eliades, the noted market bear, wasn't sniffing something out in these markets last time he was here, a little more than a couple of weeks ago. Take a look at this. How bad does this bull market get as you see it right now?
You don't want to hear that, Neil.
Sure I do.
Okay, so I would be very surprised if we don't get back down to the lows, not the lows of 2020, where we had that huge decline in a very short period of time, but I'd be surprised if we don't go back. Ultimately, this is not going to happen in a few weeks, back to at least the lows of 2009 again.
2009?
Yeah. I like the way you said that.
All right, that was back on February 9th. I misstated the time he was last with us, but he's back with us. Peter Eliades is the Stock Market Cycles editor and publisher. So, Peter, you sniffed out something then. Are you still sniffing the same thing now?
Yes, I'm still sniffing the same thing, Neil. You know, things are so interesting now, aren't they? Usually the technicals lead, the market leads, and then things start to happen fundamentally because everyone's waiting for that big fundamental story to guide us to the next big market move. What's the Fed going to do? What's happening here? What's happening there? So all of a sudden, the market starts to go down in earnest, and we get this story about the Silicon Valley Bank, you know? I mean, those things happen after the market starts to tell you bad things are going to happen. By the way, I heard, Neil, I don't know if this is true or not, it may just be a rumor, that the big board meeting at the Silicon Valley Bank in February, their discussion was climate change. Pretty appropriate, huh?
Wow. I know you don't look too much at fundamental developments and all of that. This is technical. You look at charts. You go into the weeds in the market and all. There are a lot of people who are looking what has been going on for regional banks and saying that that's a bad harbinger for them as a lot of money finds its way to bigger banks. We've heard reports, for example, the Bank of America has gotten about $15 billion in additional deposits, I believe, Peter, over the last week. That's a fundamental development based on this fundamental fear. I get that. But technically, what are you seeing here for that sector? Because it's so pervasive as to its impact on so many other sectors.
You're absolutely right, Neil. The financials tend to lead the market because that's where the focus is. I mean, that's the money. We're talking about money when you talk about the financial side of the market, the stocks that represent the financial side of the market. So they're not doing very well right now, and that's understandable. Let me make it simple for people that perhaps don't believe in the technical side of the market, Neil. I guess over the long term, if you want to have a simple system of the market, you simply look at what almost everyone looks at, even the non-technicians, and that's a 200-day moving average. What has the price been the last 200 market days? Average those prices out. If we're below it, that's negative. If we're above it, it's positive. Well, we got above it for a couple of months coming into the top here in early March, and everyone got excited again, I should say, the top in early February. We got above it by then. That was the peak. We started coming down. Now we have broken a 200-day moving average that has been declining. When a 200-day is declining, that simply means the current price is lower than the price of 200 days ago. So if you simply look at that and nothing else, you will be well guided in the market. You will not lose 30, 40, 50% of your equity, okay? It's a simplistic way of dealing with the technical side of the market. And right now, here's what's interesting. Right now, virtually all the important averages and indexes are well below. They've gone back below just in the last week or two, back below their 200-day moving averages, which are declining for the most part. The only one that is holding here pretty well on a relative basis is the NASDAQ 100. It's interesting. I guess you can say they represent the tech stocks, but they're fighting a big battle right now at their 200-day moving average, attempting to stay there. And so far, they've been able to do it.
Yeah, and they've got a double, whammy potentially here. Not only what had been a rise in interest rates, it's reversing. That might save them here if it holds. But also what's happened to venture capital and drying that up for the big boys. That is not as consequential as some of the smaller players, but it could be something to watch. I'm curious what you make of what's going on with some of the major averages. The S&P 500 is about 70 or 80 points from being negative on the year. I know you go out a little further and look at 200-day average action and all the like, but what do you make of that?
Okay, here's something to watch, Neil, and this is potentially very important. There has been, you and I have talked about this before, there has been a very consistent 20-year cycle in the market. You can go all the way back to 1922. Now, go forward with me every 20 years, and you'll start to recognize some of these very important bottoms. 1942, 1962, 1982, 2002, every single one of them, important market bottoms. So in 2022, last year, an important market bottom was scheduled to appear. Well, we had a bottom in October of 2022, and we have yet to go below that bottom. So you can make an argument if you want to be bullish. You're not going anywhere to the downside until you break those October lows, October of 22. Now, some indexes are closer than others, but you break those October of 22 lows, and then you really accelerate to the downside. You're really in trouble.
We are affiliated with a 501c3 called We Are the 51%. This is based off of all the good people in the world giving extra effort to have a better way of life. You can donate, sponsor, or even make a tax-deductible payment to help these children to get food so no child goes to sleep hungry. How you can help is to go to our website, matt55.com. You go to the bottom right-hand corner of the video, then click the button that says Retail Customers. You can choose either option, the $5 or the $40 donation options. Either click the Add button below the dollar amount of which one that you choose. Then the next page, choose the quantity of the donation amount. For example, if you'd like to donate $1,000, then you can change the quantity amount to $200. Then click the Checkout button in the bottom right-hand corner, and then on the next page, enter your credit card information, name and address. We will send you out a receipt for the amount so you can write this off as a donation on your taxes or also on your business taxes. Remember, our main goal is $1 million to help sponsor 20,000 children. 1 billion people in the world will lose their life due to starvation due to the famine that has already begun by 2025.
In case I don't see ya, good afternoon, good evening, and good night. Yeah.